What kind of steps could we take to help the economy as a whole be more resilient to this kind of exogenous shock?
It's an extraordinary shock, unlike anything certainly that's happened in my lifetime. And a couple things come to mind. I think the time will come for a careful assessment of the answers to those questions. It's early to be asking them. We're still putting out the fire. We're still trying to win, and I think we'll be at that for a while. But I'd point to a couple of directions. We worked hard to strengthen the banks, much higher levels of capital, liquidity, a far greater sense of what the risks are they're running and how to manage them. So the breakdowns that we've seen in market function have really been in the capital markets, and I wouldn't rush in with prudential regulation into the capital markets, but I think and we did plenty of things. Tri-party we did a lot of reform in the capital markets, money market reform, tri-party repo reform, central clearing, all these important things. But there will no doubt be, with this, the size and force of this shock will no doubt reveal weaknesses in the financial architecture, and we'll have to go to work on those. I also think it tells you the importance of getting your fiscal house in order. The U.S. really hadn't gotten back to where we needed to get on fiscal policy, and so we have an already high level of debt to GDP and rising quickly when this shock arrived. Now we have the fiscal capacity to deal with it, I believe. But we will need to, ideally you would go into an unexpected shock like this with a much stronger fiscal posture.